We're also sending a message to the virtual currency industry more broadly, today and for the future. If virtual currency exchanges and financial technology firms wish to realize the tremendous benefits of being part of the U.S. financial system and serving U.S. customers, they must play by the rules. And if they do not, the U.S. government will take action.
And there you have it from Janet Yellen. She's sitting there telling you that they're getting ready to crack down on U.S. exchanges that aren't in cahoots with the U.S. federal government. There's rules they need to abide by. They're going after them. We just seen this recently with CZ and Binance. What happened? You see that he pled guilty to violating money laundering rules. He had to pay a $50 million fine and step down, and he's looking like he might do some jail time. This is an easy let-off. Might do a year, maybe a little less. We'll see. But it's a lot better than what happened with the guy from FTX. But you see what's going on. What does this mean for exchanges? Should you keep your crypto on exchanges? The Bitcoin bros have been telling you for the longest time, not your keys, not your crypto. Buy yourself a cold storage wallet because you definitely will need it in the future. And with that, what's happening, Crypto Crew? Sean's coming back at you, another cryptocurrency video. We have a jam-packed video. We have an expert talking at the end, so make sure you watch this to the end. We're going to be talking about 2024 price predictions. Looking at the Bitcoin price chart, what do we see? We see Bitcoin at the current time this recording is coming in right below 38,000 at 37,790. And zooming into the price action, we can see that we had this huge bullish candle. This is a bullish engulfing candle. Now, we'll see what happens tomorrow. We have to close up. This seems bullish. We have to close up. As long as we close above this level here, the 37,495, it seems like this is a bullish engulfing, but will we have a continuation going into tomorrow? Zooming on the price, we see that the RSI is definitely putting in higher highs and higher lows. Even with this pullback right here, this could be a higher low, but you got to be careful right here because you see we put a high in, then we had a divergence because the RSI went lower, but the price went higher. So that is definitely a bearish divergence. We could be seeing this come back down, turn back around to cool off before we have continuation. So where we cool off to, we come back down to retest that $30,000 range. We've been telling you this because that's acted as a major level of resistance and support for quite some time. We've showed you this in previous videos, so keep this in mind. But looking at the dollar, we're seeing the dollar Dixie chart. What do we see? What do we anticipate? We've seen that this has been overbought, and we didn't quite get into the oversold territory below 30. We came down to a low of about 34.7. But zooming into the price action, what do we see? We see that right now at the current time of this recording, we did fall back below the 20 and are currently getting a retest, and looks like we could be hitting our head. This looks like this could be getting ready to change. The trend has to change. Remember, we showed you times where the DXY and the moving average 20 and 200 come apart. Right here, they're extremely extended. We're going to want to see them come back and converge. So could we see this roll over to come back and cross this 200? And that'll also push this price action down. Zooming out, we can see there's a major level of support that's just been put in higher highs and higher lows. And this is a bullish megaphone. So are we going to see a blast up out of this megaphone from the Dixie? That's a potential, but either way you cut the cloth, this could have this retracement, and this is when Bitcoin and the crypto market can go on a bull run. So are we going to see higher price action? Right now, it looks like the Dixie could be ready to cool off. If we break this line, Bitcoin and crypto could get even more bullish. The major level of support, if that green line does get broken, will be down here to the 78 range. So are we going to see Bitcoin and crypto stop here? Are we going to come break through, flip support to resistance, and then come back down to that 78 range before ultimately just basing out here before trying to come back up? You have to pay attention here because the Dixie tells you what Bitcoin is going to do. They're inversely correlated. Remember that. Looking at the Bitcoin hash rate, what do we see? Why is this important? Boom. We just put in a new all-time high on this orange line. Why do we care about this? Every time Bitcoin puts in a new all-time high on the hash rate, it's a leading indicator to price. Price is indicative of what the hash rate does. So keep this in mind. This is definitely bullish for Bitcoin. In the upcoming weeks, we could see that break up to the upside and a continuation. So looking at the charts, we could just have a base out, then a continuation. Remember, the hash rate is a leading indicator. It doesn't happen right away with price. Bitcoin dominance is still steadily on an uptrend. No need to go into this chart. We've showed you this. If this breaks major levels of resistance, we'll report back onto it. What do we see for 2024? TA Trader Allen's weighing in. He's looking at the 2014 to 15 going into that 17 bull run. We've had this falling wedge pattern, the breakout, flip resistance to support, and then have a continuation. We'll look at a falling wedge pattern, and now we're just stair-stepping our way through this channel. Are we going to get that breakout, which Bitcoin seems to be ramping up to make some type of big move? Once we hit that high, which could be around that $45,000 to $50,000 range, flip resistance to support before having that continuation into the 2024 bull run. This is definitely looking like a multi-$100,000 Bitcoin. Now, how high are we going to go? Mark Yusko is going to weigh in and tell us what he sees for 2024. Let's hear what Mark has to say.
June 25, we likely, or fall 2025, logic would say we get too high and then we correct. And why do we get too high? Because the speculators come in and the gamblers come in and people lever. But if there's not as much leverage this time, then maybe you don't correct as much. But ultimately, we'll go to excess and we'll need to correct. How much we have to correct, I think, depends on a lot of things. Look, if the big boys are here and have decided that, choke point 2.0 really didn't work, they tried to kill it. The thing is, you can't kill the technology. Right. You can delay the adoption by, making the on-ramps and off-ramps difficult, or, trying to legislate your way to make it challenging for businesses. But at the end of the day, name a technology that a better one came along and it survived, right? I went to New York yesterday for a couple hours for a conference, and I didn't take a stagecoach. I didn't take a horse and buggy. I didn't take a train. Took an airplane. Horse and buggy replaced the stagecoach, and then the automobile replaced the horse and buggy, and then the train, was better. And then, ultimately the airplane came along and it's better. Technology is evolving, and digital technology is here to stay, and blockchains replace trust with truth. Truth is better than trust. And the banking industry has relied on trust for 800 years. They've had a good run. It's coming to an end. It won't end tomorrow, but ultimately we can all be our own bank. We can own our own assets. We can own our own identity, our sovereignty. The key word in the white paper is peer-to-peer. The reality is that's the key. What does that mean? It just means that I can send you value without an intermediary. Right now, you have to have a bank account. I have to have a bank account. I send you a wire or a Venmo or something. I send it to you electronically using an app, but that's Web 2, Mark. Well, yeah, but then it leaves the web and goes into the banking system. That is not native. That is not digital. So what's going to happen in Web 3 is we're going to have native currencies, Bitcoin and others, that will never leave the web.